Okay, we saw from our pricing charts and our candlestick charts, we can get some good information out there. And we're also seeing as we overlay trend lines and maybe looking at moving averages, either simple or weighted ones, we can get a little bit more information and starts to maybe tell us a story of what might be happening, at least from a technical analysis standpoint. Now we're going to look at patterns. And now that we've got the story starting to evolve, now we want to really have the story really tell us even more so we can make some decisions on what to do next. Buy, sell, hold, whatever it might be. And the first one we're going to look at is a common one called a rectangle, because it looks like a rectangle. We'll see the chart here in just a second. And really a rectangle is a trading range that is bounded by a support line at the bottom and a resistance line at the top. And the trading occurs between them. A resistance line at the top, support line at the bottom. Understanding support lines and resistance lines are real important. So once again, support line is the bottom, resistance line is at the top. Think about it like it's resisting the price going above it is the resistance line. Support lines like supports it from bouncing, going too low. Until there's a breakout, inside the triangle, the prices are trading in there, and a breakout will occur, pushing through either a support line or a resistance line. One thing with breakouts in general, a general technical analysis part is breakouts, when they happen, when they break the pattern, they will tend to follow the original or previous trend. But not always. That's the thing. It's like predicting the weather. It doesn't always happen, but that's the idea, is they will tend to follow the trend, the previous trend that's happening. We just are in a pattern right now. So here's an example of some pricing here. You can see pricing over time. It looks like it's gone up here. The pricing's gone up. And now we've reached a period where we're in a rectangle. You kind of see where the red lines are drawn there, how it looks like a rectangle, right? Prices go to a top, and then they come down to a bottom. But then they go back up to a top, and then a bottom, and then a top, and then a bottom again, and then up to a top again. And they're trading within this range, in this particular range, with the resistance line at the top, as we talked about, and the support line at the bottom. In this particular chart, as we see here, this particular cryptocurrency we might be looking at, it just can't break through that resistance line. It just gets up that high in price and stops, and then comes back down. By the same token, when it gets to the support line at the bottom, it doesn't go any lower either. It gets stuck there, it gets stopped, and it basically gets supported and then goes rebounding back up. And it trades within this pattern. Now, it doesn't always look like this. It might be a little bit narrower or a little bit wider, but when you start seeing this pattern where they're up and down, up and down, up and down over a period, you're in a rectangle. So the key in a rectangle is at some point, you'll have a breakout. Something will change, some type of resistance, something will happen where people start investing or something changes and they'll break through either the resistance level or the support line in this particular case. So if we look at this, if you look at the far right, you can see where it's reached the top of this resistance level. Where do you think the price is going to go next? If you were to guess, and this would be a guess, if you were to guess, which way do you think it would go next? Would it break through the resistance level? What do you think will happen next? And the key thing, let's take a look. The key thing is, at this point, we don't know. In a triangle, in a rectangle, we don't know yet. It could either break through, have a breakout, and go up and be A and now follow that previous pattern and keep rising. Or it could be like B and go back again in the pattern and go to the support level and then bounce back up again. When you reach the tops and the bottoms, that's where it's either going to rebound and stay within the rectangle or it's going to push through either resistance or the support line. Think about like the sheep on the hill again, where we show the sheep going down the hill. This is like the sheep are caught in the rectangle. And at some point, the sheep are going to break through the resistance line and say, let's go, hey, everybody, let's go on this hill where all this green grass is. Or they're going to say, no, we should just keep going down that hill and follow the road. And then rebounding back down to which would be B. So when we talk about trends, you want to let the trend establish. Because if we were to guess, like I asked you in the question, where do you think the price will go next? A technical analysis person would say, I don't know where it's going to go next. I need the trend to develop first, and then I'll decide. And if it started to go down, I'd say, it's still in the rectangle towards B. But if it started to break through and go up past that resistance line, I'd say, we've broken through. The pattern is broken, so we've broken out of the rectangle, and now we're on a new trend. And this is where we might want to invest because now the trend is established, we've broken through the rectangle, and we're moving up, is the idea. But until the trend is established, you don't really know. Then you're more guessing whether you're still in the triangle, or still in the rectangle, or if you're breaking through the rectangle. But when you see patterns like this is a rectangle pattern where it's up and down and it's bounded by a resistance level and a support line.